Hey everybody, Tim Ulbrich here, and welcome to this week's episode of the RX Money Roundup segment on the YFP podcast, where we give you our take on relevant financial news and updates, answer your questions, and break down examples of financial planning in action. Today, I'm talking about the impact of federal interest rates on student loans, in particular for those borrowers that are taking out loans this academic year. But before we do that, let me give a shout out to our financial planning and tax professionals at YFP that make this segment possible. At YFP, we support pharmacists at every stage of their careers to take control of their finances, reach their financial goals, and build wealth through comprehensive fee-only financial planning and tax planning. You can learn more and book a free discovery call by visiting yourfinancialpharmacist.com. Okay, this week we're talking about student loan interest rates, in particular as it relates to federal student loans. Now, when I graduated back in 2008, many of my federal loans were at a fixed 6.8% interest. Not all of them. I did have some that were at lower interest rates that don't exist today in the high interest rate environment we're in. But most of my couple $100,000 of student loan debt was at a fixed 6.8% interest. And because of that higher interest rate, and because I was on the standard 10-year repayment plan, I often had a nagging feeling of, hey, I'm making big payments, but I don't feel like I'm making a whole lot of progress. And unfortunately, current students are going to face similar challenges. Actually, they're going to face more difficult challenges if we look at the interest rate environment that we're in right now. This fall, interest rates on direct unsubsidized loans and direct plus loans are 8.08% and 9.08%, respectively. Again, direct unsubsidized, 8.08%, direct plus loans, 9.08%. Those are big interest rates. And many pharmacists, new graduates especially, although those in school may be aware as well, when you look at your pharmacy school loans, most, if not all of those loans are going to be unsubsidized in nature. As the name suggests, the federal government does not subsidize, does not pay for the interest while you're in school, while you're in the grace period, or while you're in a period of deferment. Meaning that the second you borrow those dollars, you're going to start accruing interest. Eventually, that interest gets added to the principal, and that starts growing interest, which is the process referred to as capitalization. And because of those higher interest rates, I'm predicting that there's going to be a wave of refinancing that's coming for pharmacy graduates in the future. Now, remember, these are fixed interest rates, and we typically think that fixed equals good, but in a higher interest rate environment, such as the one that we're in right now, especially if we think that rates may come down in the future, we don't know for sure, but rates may come down in the future. This is less than ideal. Not only are the rates high, but again, important that we understand the definition of unsubsidized. These loans are accruing interest while someone is in school. So we're going to have graduates coming out that are likely to have higher than normal debt loads than what we've seen over the last several years, unless there's other factors that may reduce that in the form of scholarships or forgiveness programs or other things, because of that interest accumulation that's going to happen at these rates in that 8 to 9% range. Now, while there are certain instances where refinancing your federal loans makes no sense, such as those that are pursuing loan forgiveness, right? We don't want to give up that benefit. These higher rates are going to lead to competition in the private refinancing market in the future. Again, assuming rates come down. So the question is, if you're a current student and you're taking on these loans at these higher rates, what can you do or what should you do? Well, first and foremost, you want to do everything within your power to minimize the amount that is borrowed each semester, knowing that, again, due to these loans being unsubsidized and accruing interest daily at a high rate, any reduction in the amount that you can borrow will matter. Now, this sounds obvious, right? But the way these student loans are often presented when it comes to financial aid packages are in the maximum amount that you can borrow. And really, the question that we should be asking is not what is the maximum amount that I can take out, but what is the amount that I need or have to take out if I'm able to make some other adjustments, right? Because if we reduce that amount that's borrowed, we're going to ultimately reduce the amount of interest that accrues, and that gets capitalized and that we pay back in the future. So this can come in the form of making any adjustments on living expenses to minimize the amount that's borrowed, working your schedule in terms of jobs and hours as you're able to do to minimize borrowing, and pursuing scholarships. Easier said than done. I get it. But $500,000 or $1,000 less per semester, even if that doesn't feel big, matters a lot because of these unsubsidized loans. So that's the first thing that we can do. Everything that we can to minimize the amount that we actually take out and borrow each and every semester. In addition to cutting expenses, and I alluded to this briefly a moment ago, you can maximize the pursuit of scholarships. Now, there are lots of scholarships out there that folks aren't aware of. We actually offer one through our nonprofit, YFP Gives. We have several $1,000 scholarships. We just launched that last year. We'll be offering those again here in the spring of 2025. You can learn more at yfpgives.org/scholarship. But there are a lot of other scholarships that are out there. And back in 2017, when we published our book, Seven Figure Pharmacist, we put together an appendix of that book that are scholarships available for pharmacy students. So you can go to yourfinancialpharmacist.com/scholarships and actually get a free PDF link that you can download to access some of those. Now, some of those might be a little bit out of date, right? That was published 7 years ago, but you can go out and search those ones that are available. These are often through professional organizations, pharmaceutical manufacturers, and other organizations. And don't forget about opportunities that might be available in your local communities as well. So the first thing we talked about was cutting expenses. The second thing we talked about was pursuit of scholarships. The third thing that I often encourage folks to be thinking about is, can you align your career interests with some of the tuition reimbursement or loan forgiveness programs that are out there? Now, if I had to do this all over again, I often share with pharmacy students that I have the opportunity to speak with that if I'm a P1 or a P2 or a P3, I'm thinking, are there career pathways and opportunities that are available that are areas that I'm interested in, but can also maximize my loan forgiveness or find an employer that is going to reimburse and pay for those? And there are several programs that are out there. Things such as the Veterans Affairs, the VA Education Debt Reduction Program, the Indian Health Service Loan Repayment Program, the Navy Health Professionals Loan Repayment Program, and other military-based programs. And probably the biggest one would be working for a qualifying nonprofit that opens up the door to something like public service loan forgiveness. So those are three areas that I'm thinking about. How can I reduce the amount that I borrow each and every semester? Because I know that on unsubsidized loans, that's going to have a positive impact on the amount that I have to pay back because of that interest accumulation. What are scholarships that I can pursue, even if those are $500, $1,000 scholarships? And third, are there areas of career interest that can align with having a tuition reimbursement or a loan forgiveness program? Thanks again for listening to this week's RX Money Roundup segment of the YFP podcast. If you have a topic that you'd like us to cover on a future episode or a question that you'd like us to answer, please send us an email at info@yourfinancialpharmacist.com or send us a voice memo by visiting yourfinancialpharmacist.com/ask. As we wrap up this week's episode, an important reminder that the content is provided for informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. For more information on this, you can visit yourfinancialpharmacist.com/disclaimer. Thanks so much for listening. Have a great rest of your week.